Good morning and welcome to the big story right here on the BDTV Breakfast Show. My name is Elizabeth Musa. Today we turn our lens on a major development shaking Nigeria's financial sector, the recapitalization of the insurance industry under the new Nigerian Insurance Industry Reform Act, NIIRA 2025. Insurance companies in Nigeria now have just 12 months up to July 2026 to comply with the new minimum capital requirement or face liquidation, mergers, or regulatory takeover. But here's the twist. The directive has thrown the market into confusion. Many players argue that the compositions of the new capital requirement remain unclear, and terms like admissible asset, qualifying capital, and the shift to a risk-based capital framework still leave room for interpretation. Now, the question is, what does this really mean for insurers, for investors, and for policyholders? Well, to help me unpack this morning, I'm joined by two professionals, experienced professionals in the industry. I'm joined by Rashidat Adebisi, the Chief Client Officer at AXA Mansard Insurance PLC, as well as Mr. Akinjide Orimolade, the Chief Executive of Stanbic IBTC Insurance. Welcome to the show.
Good morning. Good morning, everyone.
Good morning.
Right, it's good to have you this morning.
Nice to be on the show.
Same here. Good to have you this morning. Let me start by asking the basics. Now, the NIIRA 2025 is hailed as the landmark legislation that modernizes Nigeria's insurance laws. From where you sit, what do you see as the most significant changes that it introduces, particularly with recapitalization?
If you're happy for me to start, Lisbeth, I would just say, a few words, and of course, Jide can also take over from there. But I would say there's a reinforcement on the recapitalization because you want highly capitalized insurance companies to protect you. We must remind ourselves that we're actually a safety net, protection for organizations. And to be able to do this, we need to have the right level of capital. The second thing you would see is a lot of focus on enforcement of compulsory insurance and the ability to ensure that there is consumer protection. Sometimes people think that it's about getting some more funds. That's why insurers are charging some premiums for compulsory insurance. But it's actually about consumer protection. We shouldn't rely on the government alone to actually carry the burden when unexpected events happen. And this act really reinforces this. There is also the point on digitization. The world is digital, so the industry itself must adapt. We must have rules that support us. And we've always been challenged by the former act, which is a few decades old. And I believe that the expansion of also participating with ECOWAS, working on the brown card, so that Nigerians who drive across West Africa, as we all evolve into the after, landscape, we need to ensure that our participation is also protected. So when people are driving into other countries in West Africa, they're also protected. So I think these are some of the key things, in addition to, of course, what you say, policyholder protection. But perhaps Jide might want to add a bit more to this.
Yeah.
Thank you very much, Rashidat. And thanks, Elizabeth, for having me on this call. First of all, it's a wet day, so I expect that some of us we already have adequate insurance to be able to take care of maybe flood happening within our environment. So just to deep dive into just to add to what Rashidat mentioned in terms of the Nigerian Insurance Industry Reform Act 2025. I think it's laudable, as rightly said. It has come into operation at the right time. Why am I saying this? Looking at the insurance sector, in terms of the life business, that used to be 2 billion. Now, the government has been able to increase the capital base to 10 billion for life business, and also for general business. That used to be 3 billion, that has been increased to 15 billion. And also for a reinsurance company, from 10 billion to 35 billion. So it's a step in the right direction. Right now, when insurance companies, when they have adequate capital, based on what Rashidat said, in terms of the consumer protection, which is very important. Why are we in business? It's for us to be able to pay claims, not just paying the claims, but paying the claims, on time. So when insurance companies have adequate capital, it to be able to help them, to be able to settle, their claims, as at when due. And these are the things that can build a lot of trust, into the market. The policyholders, they want a situation whereby they ensure, either their lives or their properties, and then they can have a rest of mind that insurance companies are there to be able to take adequate protection, in terms of when it happens. So, with this capital base, I'm sure that it will be something that will help, the insurance company to be able to, instill that confidence, in the mind of the policy holders. And then, when you look at in terms of the government drive too, meeting up with the 1 trillion economy in the year 2023, I think is a step in the right direction. So. Right. Invariably, insurance companies, in terms of their balance sheet, they have more capital to be able to, in terms of investment in infrastructure. And these are the things too that can actually help, galvanizing the insurance company to be able to meet up with the government directive in terms of the $1 trillion economy in the year 2023.
Right. Let's talk about the way insurers operate, particularly in terms of product pricing, in terms of investment strategies, overall corporate governance. Do you think that this in any way will change the way operation is done?
Yes, Elizabeth, you're quite right, because, with adequate capital, that invariably in terms of the products that you now start, offering to the insurance public, you'll be offering solutions. And then, offering that solutions, with this capital now, that you have to be adequately priced. Priced in the sense that that anytime there's a claim, you can be able to meet up, with the client's expectation. And then at the same time, too, Rashidat mentioned in terms of the enforcement, with this new act right now, it's kind of a way has been able to give the regulator the empowerment in terms of the enforcement of the various things, the various products that we have in the market. In the areas of the non-life, the auto business, that's compulsory. The building in course of construction, compulsory. Public buildings, compulsory. And also, professionals that work in the health sector in terms of professional indemnity, that one too is compulsory. And then when you look at in terms of the life business, group life, when you have more than 3 employees, within your organization, you are meant to have a group life policy. So these are the drivers, that will be able to bring in enough funds into the insurance company. So once the funds comes in, like I said, in terms of the investment drive, companies now will be able to now sit and try to formulate or come up with things that will be able to help them in terms of their investment income. And then, like I mentioned, going into like for life businesses that they have long-term funds, that will assist them in terms of how they can invest in infrastructure that can kind of a way, assist, the government.
Right. Let me come to you now, Rashidat. We're talking about consolidation looming now. Do you foresee, or are you foreseeing a wave of mergers, acquisitions about time? And what does this really mean for competition, customer choices, market stability at this moment?
I would say thank you very much, Elizabeth. It's very important for us to have the right level of capital. I think many of the players were already familiar with this reality. So I think the data from the NIIRA said that almost 46% perhaps of the industry already meets this capital requirement. Of course, when we now come to the definition of capital, perhaps some people might need to do some rework there. So I would say that this is a very welcome idea. I anticipate a slightly smaller industry, but of course with stronger ability, the ability to also be more resilient, to support our clients, and very keen focus on creating value. Value creation ensures that beyond just having that capital, we're actually creating the right safety net, the right protection for our clients, whether they're corporate customers, government itself, or even individuals, SMEs. So imagine if we're able to create that right safety net so that they don't need to call other people when something goes wrong, but their insurance first comes into play and then followed by family and friends and all the other sort of support that they can come in here. With M&As, we've seen capital raise happen in banking sector. We've seen this in the pension sector. It's never detrimental. The effects that we expect is that the industries will provide stronger institutions over time, we will deepen trust. And of course, clients can then be assured that the companies they are dealing with enforcement of claims being delivered, with the new regulatory focus by our current regulators in NICOM, I definitely anticipate a stronger industry. And the digitization, I believe, is much more important. Just even before the M&A conversation has happened yesterday, the NIA, the Nigerian Insurance Association, launched an innovation hub. This is already in line with the ambitions. So just imagine all of this coming together at the right time. And we are then a very, very key pillar of the 1 trillion economy ambition that the current government has.
To you, Jide, she did mention the fact that she thinks that this will actually strengthen, the institution, strengthen the industry. I don't know if you have the same sentiment.
Yeah, Elizabeth, I mean, I don't have any doubt. Invariably, what do we do as an insurance company after collecting the premiums? Is for us to be able to pay claims as and when due. So there's no reason, with adequate capital that is coming into the various insurance business, it will further, like I said, further build trust, within the insuring public, that they will have that confidence that whenever there is a claim, they are rest assured that the insurance company will be able to settle their claim. Because while we're in business, to be able to protect the lives and also the properties of people. And then it's when you have this adequate capital, and then when the capital are used in the right direction, and good a thing, like I said, a regulator now is empowered, with the risk-based supervision. I'm sure that all these things will fall into the right perspective, and it will make insurance company in terms of governance to be able to do the right thing, so that when things of foreseen circumstance, when it happens, insurance companies can be able to deliver as and when due. Thank you.
Yeah, for the smaller indigenous insurers who are also part of this game, if I may, do you think they have the tendency to survive this recapitalization drive?
Of course,
yeah.
You can go ahead, maybe. You have something.
I think I should just you go for so go for it, please.
No. If you look at the banking sector historically, there were also indigenous banks, and there are huge indigenous banks now. So maybe we had tens and quite a number before, but you want to have stronger organizations. So indigenous doesn't mean that you don't have the ability to attract capital. In the end, it's about the value that we create for stakeholders. So I anticipate that we might have less, but the result will be a much more stable, better regulated industry. The consolidation will also make sure that capital can be sort of applied to innovation. We would see more accessibility. You have to remember that the insurance industry has different kind of players. So you don't always have to play in the large risk. You could then go into an inclusion drive, micro insurance, where we have millions of Nigerians who are not protected. There are opportunities to also, perhaps operate in other spheres, or you can decide that we just want to focus on smaller risk, SME risk. So you won't need higher amounts of capital here. So as an indigenous player, that's not what's going to hold you back. I think it's our ability to dream, to convince stakeholders, to show what was our track record, and to also work together collaboratively to create a much more stronger and better value proposition for our clients, for our country, and for even the government, because they also need our protection, and we're usually there to support them, especially with the right amount of capital. I don't know, Jide, if you have to add anything to that as well.
Well, as Riley mentioned, in terms of the small players on the market, in terms of the capital allocation, when you talk about the risk-based capital, they can always focus on, maybe this is the risk that I want to do going forward. And so there's always room, in terms of the various players that we have in the market, in terms of the Takaful, in terms of the micro insurance, and because we're talking about the financial inclusion too, we have to be able to focus that, it's not just the bigger players that will have to be able to do this line of business. You can just leave it to the micro insurance arm of business. In a nutshell, it's just to make, a statement in such a way that, in terms of the insurance reach, within the populace, we are there, and at the same time, we're able to offer adequate solution, to our various policyholders.
Let me come back to Rashidat, because at the heart of what insurers do, it's trust. Now, Nigerians still underinsure compared to the global averages. So how might this recapitalization, how could it affect public confidence in insurance products?
Very clear, Elizabeth. You then have much more serious players in the market. You know, when you have a high performing market, you end up creating better value because we're all looking for ways to ensure that clients are protected. Right now, beyond just being underinsured, we have research from EFINA, the Access for Financial Inclusion in Nigeria, who already tell us that some of the reasons, apart from affordability, accessibility. You mentioned trust. Some people don't even understand how insurance can play and protect them. They see it as something that is not needed. In fact, God forbid, or God is my insurance is a typical terminology or statement that we hear in our industry. I believe that with the recapitalization, a lot of players will start to focus on having value-based conversation. Imagine if you say that we want to put our clients back to where they were before, and if we haven't updated, the valuation of their assets, if we haven't made sure the right people are having conversations. One of my fears is that sometimes people relegate the responsibility of taking a decision on your insurer to people who don't have the full context of the fact that insurers are financial protection. It's one of the key wealth instruments, not of just individuals, but of organizations. So it needs to be brought to the boardroom the same way that you have that conversation around who is your banker. So I believe that the recapitalization will really help here. The digitization conversation will also help people to see what is the value of my car. If you bought a car some years ago in Nigeria, you think it's depreciating. Honestly, it started to appreciate in terms of NIIRA value. So this conversation will then be brought to the fore, where we can use digitization to show people that, look, this is in a very transparent way. This is what your car will go for now. So we can then ensure that they're actually insuring themselves for that value. I believe also that, this zero tolerance on claims will help to build trust. Because if you know that your claim will be paid, if you know you'll be reinstated back to where you are, then it means that you will then be in a better state to put that money away. Your trust has to be, a bit more solid. We sometimes you can say in AXA, for example, after God, maybe, you have to put your trust in somebody that you put on earth here to help us, because everybody likes to talk about God in Nigeria. So the recapitalization is definitely a recipe for trust, I would say. So what do we expect? Public trust will definitely grow in insurance. Why? We see people would leverage a lot of all the laws. It means that even third parties who were not responsible for somebody, doing the wrong thing can then be recompensed very quickly and can also be put back. So when you put all of this into context, trust will definitely keep being built. And the recapitalization is not the only recipe, I must say. There's a lot of awareness, engagement that we must do as an industry to really bring it to fore. It's a behavioral change. I like to say it's a marathon, but it's one that we are all committed in the industry to bring to life.
Thank you, Rashidat. Jide, any other additions to what she said in terms of assurances that policyholders like myself can have that this recapitalization exercise will not only protect the industry, but also protect their claims and benefits? Do we have more assurances?
Yeah, great, Elizabeth. Apart from the, when you look at the NIIRA 2025, one of the provision again is that insurance companies, out of the gross premium income that they are going to have, they are meant to set aside 0.25% as policyholders' funds, from their account. So invariably, what this means is that in terms of the trust, that the insurance industry will be able to bring into the market, the further reinforces it. And then with this capitalization put in place, yes, shareholders, and then the board of directors, they will now be very they'll be very strict when it comes to the governance. If you're not meeting up with your claims as I went due, the board will want to be, they want to be interested. In terms of customer service, their complaints, from any of the customers. Right now it's something that the regulator will put on their website. So these are the things that. As management of organizations, they're very careful. They want a situation whereby customers are satisfied, in terms of the products that they bring into the market, and at the same time, in terms of the service that they're able to offer to all these policyholders. And like I mentioned, in terms of the claims payment, not just paying the claims, but at the same time, making sure that they pay the claims on time, because adequate capital has been injected, into the business. And then what are we talking about? Because once trust, is instilled in the market, what that means is that in terms of the growth of the insurance industry, we'll start seeing, there will be a lot of positive changes. People will be attracted, in insuring, their properties and also their lives.
Looking ahead now, Rashidat, this will be for you and then to you, Jide. Looking ahead now to July 2026, what do you expect that the Nigerian insurance landscape, what do you expect it to look like if this recapitalization exercise succeeds, especially with respect to the 1 trillion naira economy that we're looking to build?
Well, thanks, Elizabeth. I
$1
definitely
trillion
expect
actually.
it's $1 trillion that we're working towards. Totally right. I actually expect a leaner, a well-capitalized industry with more enhancements on digital operations, more integrations, lots of conversations to provide solutions that really matter to people in ways, in languages, in places that they like to operate. I expect deeper market penetration. As you know, insurance penetration has remained below 1% despite the potential and the opportunity. So if we're able to be there on the journey with our clients, what we definitely will see as the outcome is improved consumer trust, more resilience for companies, for SMEs, for individuals, because I do joke that almost everybody is an insurer. When people have problems, they call you. But what if that responsibility can be moved to an insurer with a small known amount all the time to ensure that they can be protected when there is a large unknown risk that happens to them? So this recapitalization will definitely help us in here. A lot of support from the regulator. We have a very strong set of regulatory leaders at the moment who are ready to improve consumer trust, who are focused on consumer protection. So you should anticipate that the conversation about consumer protection will be there. Enforcement will be very key. So it means that if something unfortunate happens to anyone or people who are not taking the right actions, we already have an empowered regulator who can ensure that things are enforced, conversations are had, and in the end, we have a stronger economy. So a lot of operators in the market, even the government, will be better, protected and be ready to conquer the whole world. So definitely global conquering is in the fore, and you can be rest assured, have peace of mind to pursue your dreams because the insurance industry is here with you on the journey, especially with this recapitalization.
All right.
Thank you. Do you want to add anything else?
Okay, right. Thank you so much, Rashidat, and thanks, Elizabeth. Just to add to what Rashidat mentioned, I think when you take a step back, if you look at the banking industry, prior to their recapitalization, you realize that most of the big transactions, when it comes to the financing of the major projects, you realize that the banks, they couldn't do it. They had to, resort to foreign banks to be able to do that. So, I think for me, one of the benefits of this recapitalization is that, insurance companies now, they are now able to take on the larger risk, in terms of the oil and gas, in terms of the power sector, in terms of the construction, they will be able to, form a consortium, just like what Rashidat mentioned. So what we need in the market is more of collaboration. And then do the thing too, the way we are driving technology, I'm sure that it's going to be able to help because, technology is not something that you just get with a very small capital. You need a lot of money to be able to make, your technology to be very robust, in terms of onboarding your customers, having that EKYC, that's know your clients for your customers, all these things, they are things that will make even the policyholders themselves see insurance that, it's quite simple, and at the same time, ability to be able to get those products, it's something that they can get. The products are not too expensive in the market. And then at the same time too, ability to be able to pay claims, because once you have a very good technology in place, you're able to onboard your customers. So the question is, why can't that same platform, in terms of the way you're able to settle claims, get it done? So I think for me, it's an exciting period. And I think it's something that the industry, we should jubilate about. And at the same time too, I expect that the policyholders will be able to expect the best, from the insurance company. Thank you.
Thank you very much to you, Mr. Akinjide Orimolade, the Chief Executive of Stanbic IBTC Insurance PLC, as well as Mrs. Rashidat Adebisi, the Chief Client Officer at AXA Mansard Insurance PLC. Thank you very much for joining the big story.
Thank you very much, Elizabeth, for having us.
Yeah, totally.
You have a good day. Cheers, Rashidat.
It was a pleasure. Thank you. Take care. Bye.
Thank you so much. This has been the big story right here on the Big D TV Breakfast Show. Up next is social listening. Do stay with us.